All right. That was a wild day. So this is like back to back negative 1,000 days on Dow Jones. And I don't even think I got up out of my seat except for maybe one time in the last 8 hours. So I need to go and on a walk or something because this was painful. Um, so I wanted to talk about gold really quick. Gold has completely done um, the original plan that I had was for gold to obey this seasonality chart where it kind of has a top around February 24th, February 21st every year, and then descends into this March 2018 FOMC statement. So we really got ahead of ourselves immediately on this and sold off quite a bit right away, especially on silver and platinum just completely died, especially towards the end of the session. And this year Camarilla R4 plus the gap up in futures really kind of signified to me this little gap right here, that this could very well be that blow off top that we were looking for. And just something, so we've been long ever since I was long from here to capture this last little bit of seasonality. I talked about this in the last video. Um, and then expected some kind of move, but not this big move. This is pretty big. This is huge. I thought it would just, kind of go around here and then kind of just die somewhere. But we've got the virus news, and it spiked it up on Monday. So this level right here where we shorted at, this year R4, this is a really great short. And I wanted to draw back to the idea that we have these ATR stops that we use, and I thought that there was a good idea to back here that it was a great support. We just kind of rode this level back here in November, and December timeframe is when the big seasonal move starts. Again on that same chart that we were talking about, or that I was talking about a second ago. That same chart for seasonality, you have that final FOMC statement somewhere around December 10th to 15th, maybe right here, and this kicks off the rally that starts and goes all the way through January. So that was a great time to buy and just hold, and then you have this final capitulation here. So I thought that this day ATR was a great location. It looked like this was kind of a parabolic buying, and that this was a good place to have the target set. So this was a nice 50-point short, and I closed it out the rest of it today when we got down to those levels. So I keep coming back to, let me get rid of that one. I keep coming back to this chart of S&P 500 where we wanted to see some kind of a big capitulation move that is these curves that I keep talking about, where they kind of start and end violently. And when it started, it was back in December 2018 when Jay Powell kind of capitulated off of his idea of continuing to raise rates. And, Trump has sent a tweet out complaining about it, then says it's probably a great time to buy stocks. That was all right here on Christmas Eve 2018. And we struck this 200 weekly moving average. So I thought originally that we could climb up and backtest this breakout white trend line. We're almost there. We're really close. So I'm thinking that tomorrow, somewhere around 3,100, we might have something where we gap down tomorrow, maybe. Hopefully we have a gap down. And maybe have a candle that kind of, has a low and then just completely just goes, all the way reverse back to maybe this level under here. This level under here is my target for Maybe this week, if we can actually rebound here and make a big candle and come back up to about 32.20 to the bottom of this big this structure right here. So if we can make it back to, you know, this area, that would be or this area right here, that would be great. This happens to be yesterday's close also. So yesterday's close was about 32.25, and if we can make it back there, that would be great. Something else to notice is that Dow Jones futures ended up right around the 200-day moving average. So it hitting this level is pretty important. DAX, same thing. DAX kind of died on this January 2018 level, but it closed right on that 200-day moving average. So I'm thinking that it's possible that we can, let me see, that we can actually have a rebound tomorrow, maybe a gap down, and wipe out the remaining longs, and then power through the rest of the day. I'm not sure. When I keep looking at gold, the gold scenario here is that it's not believing the sell-off. We had the initial rally on Monday, and the initial rally agreed with the fact that we could be entering a new paradigm of a sell-off and in the markets, and gold responded with VIX, it responded with bonds, but gold stopped here and obeyed that seasonality date and just kept coming lower. So the play for the last 48 hours was any kind of market strength on the way down resulted in a immediate sell-off hard in gold. So if the markets rebound at all, my thoughts are that gold will completely get crushed. Silver already, you know, same thing. Silver completely died on the January high. And that was also this, let me find it. Let me find it. I've got a lot of templates. That was right on this month R4 level. So this month Camarilla R4 level also happened to be this January 2020 high, or January this year high. So this was also a great short along with gold. And since silver was not cooperating with gold with the rest of the precious metals like the way that gold was, it was a great target for shorts because this, you know, it just wasn't getting the rally that gold was. I mean, compared to gold the last month or so, it's just been it's been night and day as far as what has received most of the buying. And we're all the way back to this last close. Y means last close year. This is the December close. It went all the way back to the December close and was negative for the year for a second. And it only took 2 days to do that. So that was pretty important. If you look at Dow Jones futures again really quick here, we are approaching... We're approaching this year S3 pivot right here. So along with my theory that we could have a gap down selling and then immediate buyback, this could be a level that we visit tomorrow, along with S&P 500 hitting that top trend line that I talked about a second ago. So this level right here, I think, is a huge level, and we're still in like a decent uptrend. Like if you look at this chart, I mean, it could get worse, but I kind of doubt it. the amount of selling that we've had has been, has been extreme. And this volume right here, this volume is nuts. Like, this is the most volume we've seen for a long time. Probably, well, at least until October 2018. But maybe if we go back to February, it was something similar. This volume here was about, for one day, 655,000 shares. And this is getting close to that level, 560,000 shares. So we're almost there. So if we go back to, if we go back to February time frame, what the original thought that we were supposed to do, and the sell-off got interrupted right here. We were supposed to have something like this on February, starting late January to February, just like back here, late January, sell-off lasts for 7 days, and then a rebuy. This happened to be right on the 200-day moving average for S&P 500 back then. We're not quite there for S&P 500. It's been much stronger than Dow Jones. Dow Jones got hit a lot today because bonds got a huge bid, and the yield curve, I think, is inverted all the way to the 5-year right now. So the only thing left is what, the 15-year and the 30-year? I'm not sure. So hold on a second. So the sell-off sequence was 2 big red candles or white candles in this place, and then the last one was started out kind of where it closed, sold off really quick, and then a huge buyback. So I'm thinking that's something similar. That's what's going to happen here. History doesn't repeat, but it sometimes rhymes. And then this big support level for S&P 500 is important. Bonds, 30-year bonds, are doing some really interesting things. So I keep talking about this level here for the Trump election, and Trump election week was way back here. This is where bonds started that week at 162.20. And we had this little breakout wedge right here that I had an idea on that I've shared a couple of times. This was right at the beginning of that virus, right here, January 23rd, and we broke out of this. I thought the target could be this year CAM R3. We might get up here. My last target was this trend line that goes all the way back to the top back in July 2016. I thought that could be the final target. We actually back tested that today on this daily candle and went even higher. The volume is nuts right here. Either this is breakout volume or it's capitulation volume. This is kind of the same setup that we had last year in the summer for gold when it made a major trend line hit breakout last year or in the summertime. And you have to kind of go to the monthly chart to see, or no, we can go on the weekly chart to see it. There's a trend line here that you can build that we were sitting up against for a very long time until finally we broke out of it. I think it might be easier if you see it on the CFD. Let's see. Yeah, kind of built up right there. So hitting a trend line like that, and this is more like a neckline. You can see kind of a big, inverse head and shoulders here, where this would be like the left shoulder. Here's the head. Here's the right shoulder right there. And then it hit this for a long time, frustrating pretty much every person in the precious metals complex until it finally had some big volume here and broke out here. And this is right when, if you look at the Barclays negative yielding index, the world negative yield debt being held crossed a huge threshold right here, and we went up to something like 15 trillion, and it just exploded the amount of negative yielding debt that the world is holding. and here's that year R4 again. So this weekly candle, the way it's currently formed, we're only halfway through the week, is not great. And I think that we actually do pull off that seasonality and go into March, and then maybe have another chance for a rebuy, maybe sometime in the summer or late May or something like that again. So that's the play tomorrow, I think. Going into S&P 500, and here's that Dow Jones level again. I think that these are both pretty important, and I'm going to be watching this for some plays tomorrow. I went long NASDAQ futures towards the bottom today, but I did many trades on the way down, and I'm tired now. So we'll see what happens. This looks like a big support. We're due for some kind of relief rally. Last thing that I want to talk about is I'm a huge fan of looking at these metrics. This metric, I know this chart looks kind of messy, but stay with me. This is just a ribbon I created. I'm hiding the price. If I actually show the price, it's nuts. This metric in the background, what it does is it shows the percentage of stocks, I think in the NYSE across the entire index, that are above the 5-day moving average. So big thresholds are like 10%, 20%, 80%, 90%. And we reached this 10% level. And lo and behold, the last time that we were at this level was back in February 2018, mimicking that move. So we keep seeing this move being repeated. This little guy right here was supposed to only last 7 days, and we were supposed to get it right here. But the PBOC bank interrupted that by buying $400 billion right here and kicked off a couple of gaps. I talked about this in the last YouTube video early yesterday morning. So it's not supposed to last that long, but it's there. It's back in, you can see it back in previous years, but another good example was 2014, late January sell-off, only last 10 days into February, then buy it all back. So I'm looking at this and I'm seeing the indexes finally reach these 200 DMAs like the DAX and Dow Jones, and for something to travel as far as it did with zero pullback on the way down usually means you're going to get some kind of a bounce. Maybe that's a dead cat bounce, maybe it's a real bounce, I don't know. Lower threshold for DAX might be somewhere in this area if we can back test this trend line. Not sure. So I pay attention to these metrics. If you look up another one, percent stocks above the 20-day, that's a little bit more forgiving, but we are reaching a pretty big oversold level here. We're down at 15%. We don't reach this level very often. February was 1 year. October in 2018, remember this was the Powell capitulation back in late December 2018. So this is actually still a significant level. Below 15% is still like actually a decent level. The low is about 14% below the 20-day moving average. And then, these keep going. Percent stocks below the 50-day, we're not really anywhere special. And obviously percent stocks below the 200-day, this is like your ultimate buying indicator. And the only time in recent history where we reached this was December 2018. Trump got out on the Twitter machine that very day and said, this is probably a good time to buy stocks. He was right. Presidents, when they call bottoms, are usually pretty right. That big sell-off way back in January 2016, 2015 was a horrible year. That was when QE3 ended. Markets didn't like it because they're addicted to Fed money. And we sold off a couple months later in October, September timeframe, and we reached that level. So 15% for percent stocks above the 200-day moving average. If you ever reach that level, go take some money out against your house and buy some stocks. Usually that's going to have a significant rebound if you hit that level. Okay, good luck tomorrow. Come in with a clear head, and those are the levels that I'm looking at.